good intentions, and unfortunately end up missing a bill because maybe it was the mail. We always want to blame the mail, but that really could have happened. Maybe we didn't get the bill and we got behind. So when it comes to any type of thing like this, I find that having property taxes, your home insurance and things like that deducted from your mortgage payment is the right way to do it. Now, unfortunately, when you do that, here's what ends up happening. You never shop around like on your home insurance. Well, it's not just a plug and play. Each year you should take a look at your property coverage, make sure it's adequate, and also I believe you should actually call around and make sure you're not paying too much for things like home insurance. And unfortunately, when it just automatically comes out of the bill, which I think your insurance company probably loves for it to happen, because guess what? You go 10 or 12 years and never think about changing or making sure you're not being overcharged or you have the proper coverage. So you do have to still, it's not plug and play, you still have to actually do some homework and make sure. But I believe personally, when you have a mortgage, the best way to cover your taxes and stuff and your homeowner's insurance is just have it deducted. So you make that one payment and you go on. Also, this is a good time when it comes to mortgages to think about getting that 13th payment in. And people say, what are you talking about? You can really drastically affect how quickly you pay off your mortgages when you get a payment ahead, or if your mortgage will allow it, which most of them always will, make bi-monthly payments. So think about it. You pay January's payment. It was due on the 1st, so you've already paid it. Now you make another payment on the 15th, half a payment, another payment on the 30th, which is now your February payment, but it came in early. And then on February 15th, you're paying half the payment. And on the end of February, you're making the next one, which is actually March's payment. Well, by doing it this way, you can actually, and they can actually put this on an amortization statement and show you how quickly you can pay your home off. And you're still making the same payment, but you're getting the money in earlier, so it's taking down interest and things. I would keep in mind when it comes, because we're talking about taxes, just remember for the people that are on Social Security, they're just getting ready or already got the biggest raise we've seen in almost 41 years, 8.9% COLA. And we're not talking about Coca-Cola, we're talking about a cost of living adjustment. So you say, Mark, that's awesome. It is awesome. But what if that extra money on your Social Security is going to push you into a new tax bracket? And now this time next year, we'll be doing an episode talking about all the people that owe taxes they didn't expect to owe. So again, now's the time. You're getting ready to get this big raise. Maybe you should be meeting with a tax professional to see if you should have more withholdings done if you're going to be one of those people, because of the extra 8.9% you're receiving, that needs to be withholding more money out of your Social Security check so you don't end up with a big surprise 12 months from now. Yeah, you just don't want to wake up a year from now and you enjoyed the benefits of an extra 8.9% increase, but now you owe more in taxes than you expected. And that could put a lot of people at a hardship. Now remember, your standard deductions went up this year, and there's things like how much you can, for the people that are still working, they can now in 2023, it's a good time to call the HR department, because you can now contribute more money into your 401s and stuff. So January is a good time to not let too far get into the year before you make changes in how you're doing things. So January is a great time to be thinking about that and take advantage of all the new tax rules.